Good evening, everyone, and this is the sixth video and final recording of my first week of trading. Good day on Friday, so we had a good day to start the week, and then terrible Tuesday, Wednesdays, and Thursdays, which smashed the account right down to 30% plus down, 35% down. But then on Friday, the market did finally decide to drop through that June support, and it looks like we should be on the way down, and hopefully this swing trade will work out. So if you just take a look here, I drew in this kind of rather shaky short-term trend line, which may now continue to hold. I don't know whether it will get tested again before we reach the lows of this rundown, and hopefully there will be a rundown so far as my trade is concerned. But we can see the support level. This trend line held quite well. There was a reaction here, a reaction here, reaction here, and then in the last few days, reactions here, here, and here. So there was lots of bounces, but we did close the day and the week and the month and the quarter, because remember it's the end of September, down through those June lows, and that is quite bearish. I briefly closed the position about 5 minutes before the end of play, in case it was going to be a monster rally into the close and a little bit beyond, because the futures do trade a couple of hours after the market closes. But that big rally didn't really materialize, so I flipped short again, looking for that leg low. So where am I hoping it goes? Well, we look at the daily chart. We've got this lower trend line here, and right now there's also support lying at the pre-COVID highs. So pre-COVID highs are around here at 9,800, something like that. So that's our pre-COVID high there. If we just look at the weekly here, make the time frame a little better, zoom in. Okay, there's our pre-COVID high here. So we're looking for a move down to around about 9,800. However, on a quick sharp move down, if that's what we get, if we get something that's going to burn out these divergences that are still there, then that will spike the volatility index, and there's likely to be some kind of reaction a little bit before we hit that actual 9,800 number. The buyers will step in a little early, most likely, and the Nasdaq kind of likes round numbers as well. As there's often a lot of action around, you can see there was reaction here around 15,000. There was reaction sort of here around 14,000, and again 13,000. There was reactions here, 12,000. We had lots of reactions around that sort of 12,000 to 12,200 region, and I'm expecting. That 11,000 region was the June lows, and so it makes sense that around the 10,000 area we'll see some buyers trying to step in for some low value stocks. So I'll probably try and at least pull a good portion of my short out at around just above that 10,000 level, so 10,050 or something like that, and then maybe hold a little extra. So I'm short 75p per point. Maybe I close 50p of that at 10,050 and hold a little bit extra for the home run down to 1,800. At which point I expect we're going to see a decent rally, bear market rally. Whether that's our final low, I don't know. Maybe we can eventually, in the long run, kind of run down, to pick new levels here. 8,000 would be another natural level, and then the COVID lows down at 6,000 6,700. That would be another possible level. But I think that would be, if we get all the way down there, that's going to be a huge drop from our highs. Our highs were 17,000 down to 6,000. I mean, goodness, that would be 75%, 70% of the value of the stock market gone. And I can't imagine the Fed will ever let something like that happen. So we'd see a major policy reversal before that happens, I think. They'll start aggressively cutting rates, and that will have the speculators buying. So I don't see us getting down there, but I do definitely think that we can see these pre-COVID highs before the plunge protection team kick in and the Fed starts pivoting. So yeah, I think at least this leg down here, and I'm hoping that happens within the next week or two. If it doesn't, then I'm probably wrong. But we'll be stopped out long before then. Right, so that's what I'm hoping going into next week. I don't have a crystal ball. There are still bullish divergences. I think, you would buy a bullish divergence at support, but we're below support now. So unless there's a quick recovery and it's a bear trap, then I think we head lower, and I think we head lower quite fast. At least that's our trade. So let's see how that materializes. As for first week, I'm disappointed in my performance, really, on the grounds that had I just stuck with the original plan last Sunday, the account, we sold at 11,330, and it's now 11,000. So we would be up 330 points. But with all the buying and selling that I did, not only did I cost myself money in those spreads, but I also got the calls wrong a lot of the time. And so, instead of being 330 points up as I should be, I'm 150 points down. And really that's just down to, the fear of the markets. We got that big rally, a huge rally on Wednesday, along with sort of lots of articles coming out saying the Bank of England have pivoted. This is a sign for the future for the Fed. Look at the bonds dropping, and that rally kind of shook me out. And then I went long, thinking that was going to continue, and it just didn't. It just failed at support, at resistance. There was resistance right there, and I bought right at resistance, and so lost all that money on Thursday, and it was really my mistake. It's one thing, I think, when you use technical analysis and you make the rational choices and then it goes against you, but it's much more disappointing when you can see plainly that the technical analysis call is the other direction. Easy to see after the fact, but you don't buy at resistance. It's a silly thing to do, particularly in a bear market. When you have these rapid rallies, you get short, sharp bear market rallies, move a lot in a short space of time. So, and we'd had a big down week, so it was expected for us to have a big rally up. But often along with those rallies comes some news, and ultimately that just wasn't enough to hold this bear down. The bear market came screaming back, and now we're below those June lows, and I think we head down to the pre-COVID highs, or just before. I would imagine the buyers will step in a little early. The question is how early, I suppose. But next week we will see. Okay, thanks everyone.